TikTok, the popular social media app that has captivated millions of users around the world, is facing an uncertain future. The app has been banned or restricted in several countries due to national security and data privacy concerns. The United States is also considering banning TikTok unless its Chinese owners divest their stake in the platform. This creates an opportunity for investors who are looking for alternative social media stocks that can benefit from TikTok's decline. Two such stocks are Meta Platforms Inc. and Snap Inc., the parent companies of Instagram and Snapchat respectively. These two platforms have similar features and appeal to TikTok's core audience of young and creative users. They also have strong growth potential and competitive advantages in the social media market. In this video, we will explore why investing in Meta and Snap now is a good thing with a ban on TikTok being more likely every day. TikTok is one of the most popular social media apps in the world, with more than 1 billion monthly active users who spend a lot of time and money on the platform. TikTok is a video sharing app that was launched in 2016 by ByteDance, a Chinese internet company. TikTok became popular worldwide for its short-form videos, viral challenges, and creative content. However, TikTok also faced scrutiny from the US government over its data privacy and national security risks due to its Chinese ownership. Snap and Meta are two of TikTok's main competitors in the US, offering similar products such as short-form videos, stories, filters, stickers, and live streams. If TikTok is banned in the US, it would create a huge opportunity for Snap and Meta to attract more users and advertisers who would otherwise use TikTok. Snap and Meta have also been investing heavily in innovation and content creation to differentiate themselves from TikTok and other rivals. Therefore, a TikTok ban could boost Snap and Meta's revenue growth, user engagement, market share, and stock prices. The US government feared that ByteDance could be compelled by the Chinese government to hand over Americans' personal information or censor content that is critical of China. In 2020, former President Donald Trump issued executive orders to ban TikTok in the US unless ByteDance sold its US operations to a US company. ByteDance agreed to sell a stake in TikTok to Oracle and Walmart, but the deal was never finalized due to legal challenges and regulatory hurdles. In 2021, President Joe Biden revoked Trump's executive orders and ordered a review of foreign-owned apps that pose potential security threats. In 2022, Biden proposed a new law that would give him the power to ban TikTok and other services with ties to China if they fail to comply with certain requirements such as data protection, transparency, and accountability. The law would also require ByteDance to divest its US operations of TikTok or face a national security review by an interagency committee led by the Treasury Department. The law has not been passed yet by Congress, but it has received bipartisan support from some senators who see TikTok as a threat to American values and interests. Biden signed a spending bill in December 2022 that prohibits federal employees from using TikTok on government devices. Amid security concerns, Biden proposed a new law in March 2023 that would give him the power to ban TikTok and other services with ties to China if they fail to comply with certain requirements such as data protection, transparency, and accountability. The law would also require ByteDance to divest its US operations of TikTok or face a national security review by an interagency committee led by the Treasury Department. The law has not been passed yet by Congress, but it has received bipartisan support from some senators who see TikTok as a threat to American values and interests. The Biden administration is also working with lawmakers to find ways to prevent data gathered by various Chinese social media apps threatening national security, including TikTok. The Biden administration is demanding that ByteDance sell TikTok away from its Chinese ownership, rejecting the company's plan before U.S. national security officials. The Biden administration is giving federal agencies 30 days to ensure they do not have TikTok on any federal devices, and to ensure vendors play by the same rules. Meta and Snap are two of the biggest competitors of TikTok in the US market, especially for short-form video content. A TikTok ban could boost the user growth, engagement, and revenue of Meta's Instagram Reels and Snap's Spotlight, which are similar features that allow users to create and watch short videos. A TikTok ban could also reduce the competitive pressure and headwinds that Meta and Snap face from TikTok's popularity among younger audiences and advertisers. Meta and Snap have strong financial performance and growth prospects, as they both reported double-digit revenue growth, positive earnings, and increased daily active users in their latest quarters. Meta and Snap have also diversified their businesses beyond social media, as they invest in areas such as virtual reality, augmented reality, e-commerce, gaming, messaging, and content creation. TikTok uses a cost-per-mile metric to charge for ads, which means that advertisers pay a certain amount for every 1,000 views of their ads. The average CPM on TikTok is around $10, but it can vary depending on factors such as location, audience, and ad format. TikTok also requires a minimum budget of $500 at the campaign level and $50 at the ad group level. To start an advertising campaign, TikTok invested $34.4 million in advertising on Instagram in the US between January and July 2021. This suggests that TikTok is trying to attract more users and advertisers from its rival platform. TikTok saw users spending approximately 20% more hours on the platform's video content in 2021 compared to 2020. This indicates that TikTok has a high level of engagement and retention among its users, which could appeal to advertisers who want to reach a large and active audience. If TikTok was banned in the US, it could lose a significant portion of its user base and revenue potential. This could create an opportunity for Meta and Snap to capture some of the advertising dollars that would have gone to TikTok otherwise. Meta and Snap have similar features as TikTok, such as Instagram Reels and Snap Spotlight, which allow users to create and watch short videos. These features could attract both users and advertisers who are looking for alternatives to TikTok. Meta and Snap also have other advantages over TikTok, such as more established brands, larger audiences, more diverse ad formats, better data privacy practices, and lower regulatory risks. These factors could make them more attractive and reliable for advertisers who want to reach their target markets effectively. Some content creators also post their content on multiple platforms for a larger audience reach. This could indicate that they have low switching costs and high alternative attractiveness for different platforms. They may be more likely to switch over to Meta or Snap with a TikTok ban if they can maintain their audience engagement and monetization opportunities on these platforms. Meta has recently announced that it will pay up to $1 billion to creators who make videos for its platforms such as Instagram Reels and Facebook Watch. This is part of its strategy to compete with TikTok and attract more users and advertisers. The odds of TikTok being banned in the United States are hard to estimate because it depends on various political, legal, and economic factors. It is also possible that TikTok could avoid a ban in the United States if it manages to resolve its ownership issues, or if it proves its commitment to data security and user privacy. Data privacy and security. One of the main concerns with TikTok is the app's data collection practices. By banning TikTok, users can ensure that their personal and sensitive information is not being shared with third-party entities without their consent. This could also prevent potential cyber attacks or espionage from foreign adversaries. Intellectual property protection. TikTok has been criticized for allowing users to upload content without proper attribution or compensation. By banning TikTok, creators can protect their original work from being copied or stolen by others' corporate image. Companies that prioritize privacy and security can benefit from a ban on TikTok. Such a move can demonstrate that the company is committed to protecting its employees' and customers' data, which can enhance its reputation and brand image. The CEO of Meta, Mark Zuckerberg, has said several things about TikTok and why his users should not use it and use Meta instead, such as, he has accused TikTok of censoring content that is critical of the Chinese government, or supportive of democracy movements. He has claimed that TikTok poses a threat to national security and data privacy because of its ties to China. He has explained that Meta is trying to compete with TikTok by revamping its news feed and leaning into Reels, a short-form video feature that mimics TikTok's format. He has warned his employees that they are facing intense competition from TikTok and other rivals, and urged them to innovate faster and deliver better products for their users. He has outlined his vision and strategy for Meta's future growth and success in the social media market. TikTok's fate is hanging in the balance as it faces increasing pressure from governments and regulators around the world. The app's potential ban in the United States could have a significant impact on its user base and revenue. This creates an opportunity for investors who are looking for social media stocks that can fill the gap left by TikTok. Meta and Snap are two such stocks that have similar features and appeal to TikTok's core audience of young and creative users. They also have strong growth potential and competitive advantages in the social media market. Investing in Meta and Snap now could be a good thing, with a ban on TikTok being more likely every day. However, investors should also be aware of the risks and challenges that these stocks face, such as regulatory scrutiny, user privacy, content moderation, and competition. Investing in social media stocks requires careful research and analysis of their performance and prospects. Meta and Snap are not guaranteed winners, but they could be worth considering as alternatives to TikTok.